Good evening. Ira Epstein of Linn & Associates with your Spider ETF wrap-up for this pretty wild trading day of Tuesday, the 9th of March, 2021. We're about 5:10 in the afternoon. Well, GameStop, my God, up another $50. This market's back into the run ever since we heard that Chewy is really considering, Chewy, one of the founders, has joined the board, and he is guiding this market into getting back into and away from so much brick and mortar, but to the modern day, do it via the internet, the cloud, whichever way business. Traders are biting on that because of the person involved. In AMC, what do I tell you? You know, every day that you read, you're seeing that we're closer and closer in this post-COVID situation. That's where I think we're at, to getting back to a normal life. So traders are bidding that up. THCX, well, if everything else is going up, why not get high? So that's getting a bid. You know, I'm kidding. As you take a look at other parts of the market, you can see how they're slipping back and forth. But you had a monster rally, and QQQ, well, a market that is down, and I think you realize that 11% from its high into corrective territory is always prone for a snapback. Does it go to a new high? Well, we're going to find that out. Foreign currencies gaining today a little bit. What was the catalyst? Because nothing really changed. The fundamentals didn't change from yesterday to today. If you think so, great. They didn't. Tomorrow you'll get the euphoria that we're going to pass the $1.9 trillion package. I would assume, I'm praying that come Thursday it'll be signed by President Biden. That's behind us. You're not going to be able to stop it if you're pro. If you're one of the people against it, and if you're pro it, you want it to occur. It's going to be a fait accompli because the House has enough votes to get that done. It'll be a surprise if it doesn't, a bad surprise for the market. After that, the market's going to be looking at immigration, what's going on with infrastructure, and we'll be hearing the calls, as you know, all too well. We're going to hear the calls that we're spending so much money, how are we going to pay it? There's got to be tax increases, and you'll get to more of that. But right now, what moved the market today? I think what moved the market today is pretty simple. Interest rates didn't go up for another high. One day, but that's what happened. We have become so rate sensitive that each time you're over that 1.6 rate on the 10-year note, the market gets hit. Now the market's back down into the low 1.5s, and that's got the market breathing a sigh of relief. Now, how long that'll stay, I don't know. There's a lot more that has to be done with all the money coming from the U.S. Treasury this month. They started off with $1.7 trillion, or approximately $1.66 trillion, that the Treasury had told the Fed they are going to return. They were doing it in some phases with trying to get by the end of March, most of it, that's about leaving $800 billion left where they wouldn't return. The market was scared of negative numbers from that. We're not out of the woods, and about, round figures, $300 billion has been returned so far, and things are stable. But we got to the end of the month, and there's a lot more coming, nearly another $550 billion back. We'll see what happens. Then you still got more that they're going to return. We'll see. As we get here on GameStop, you now got 2 days in a row over the upper Bollinger Band, and you're overbought. The slow stochastic measurement, for those of you new to what I do, measures the market overbought, oversold, getting stronger, getting weaker. Before we get too far and I give you more explanation, I'm going to ask a favor of you, especially new people. You're on YouTube watching me, I'm assuming, maybe our website. Hit subscribe if you're on YouTube. It will help. It's free to you. Helps us with what we're doing. And if you have comments, you can always write me. But let's keep going. The odds of staying over the black band, 5% of the time. The algorithm is called a Bollinger Band, named after John Bollinger, and the market will trade within these bands 95% of the time. Now, as you saw here, the band widened dramatically after it was trading so narrow. The narrower a band gets and the longer it stays super narrow, the bigger the explosion up or down. Went up, now it's been in the process where it narrowed in and now it's widening a little bit again. You know what's going on with GameStop. You don't need me to tell you about Reddit, Robinhood, all that nonsense noise. You know the game. If you don't, read. You're over the upper Bollinger Band. The odds of staying at 5% of the time, trend up. The market's getting a little bit ahead of itself. Doesn't mean it can't go higher. Do traders try to pick tops over Bollinger Bands. I certainly wouldn't. It's one thing to come out against a band. It's a whole different game to go short against it. It's never what I'll be telling you. AMC, each time you hit the band, it's resistance. Now you'll say that's not true. You went through it. For how long? Remember what I said, 5% of the time you'll stay over it. Kaboom. So it's not something you want to be selling into. It's something that if you're long, you might want to be taking money from. What is the difference between me as a commodity broker and you watching financial TV all day? Do you think on financial TV, when you're listening to spiders, stocks, they're not telling you to go short. They're either telling you to buy or to be out of the market. I don't recall them coming out and saying, go short this is coming down. Futures are different. You trade both sides of the futures. Please remember that. So here I think the pros came out, and here I think they're coming out again. You're overbought, not in a trend. You've got upside bias. What is bias? When you're over the 18-day average of closes, which is this red line, you have upside bias. When you're under it, you have downside bias. Think of it as a filter on your other trading rules. That's how I define it. PAVE. One of the things I've been talking about when I brought this on back here was that I thought that it was going to be one of those areas that could really perform because infrastructure is going to be a key word we hear about for 4 years running with the Biden administration. You hit a new high again today. Now you'll say, oh, that looks pretty good, and I'm going to go, yeah, but it's not really in a trend. You were in a trend all this time, then you pulled back and started another uptrend, and then right here, you lost that. You've made a new high, but the pattern is a lower low and a higher high pattern. That is not a trend. That is a market that's got this going on. Okay? It's over the 18-day average of closes, so the bias is up. So where might that resistance be coming in? If the 18-day average is here, the 100, 200, people use the 50, you know that. The upper Bollinger Band. You only stay 5% of the time over it. So there's your natural resistance point. Do I think the traders are going to buy this on the breaks? Not until you get that pattern of higher lows, higher highs. That is what defines a trend. Anybody can draw, oh, the trend line is going to do this, the trend line is going to do that. I'm a pro. I can generally make an argument to do certain things. That's not smart in the marketplace. You want to follow a set of guidelines. And if they don't match up, especially given that most traders, you in spiders and ETFs are only looking to be a buyer. The market is saying to be out in longs, but it is not saying to be a fresh buyer. What about overbought, oversold? Well, it's overbought. Any reading in the slow stochastic over 70 is overbought. If both numbers were going over 80 sideways, well then with that I'm typically looking for the market to move to the upside. Okay? PAVE is one of those interesting stocks that when it does embed, it doesn't really go that far on it. It's different. Recognize the patterns that work with individual stocks. I do. In THCX, first time you hit a Bollinger Band on the upside or downside, you will consistently hear me say, that's where I think the pros are taking money off. And you'll say, well, you had us get out there and look what it did. And I agree. No argument with that at all. Doesn't mean you couldn't have a trailing stop, but as soon as you're going to lose that embedded reading, and this is embedded when the market converts from being overbought to oversold, you'll embed when you get at least 3 times in a row where the slow stochastic has readings over 80. Now just stay with me as we change these, all right? There's the first one. You don't have to believe me, but it's the first one. Day 1, 2, come on, 3. There's the 3. Until that's lost, I'm looking for the market to go higher. But I also told you, I tell traders never to buy over an upper Bollinger Band. You're on borrowed time. It's going to pull back to the right hand. And boy, did I look wrong there. Now you lose the embedded reading. What do you think's going to happen here? Well, I'm looking for the 18-day average of closes. That's often what the market does. And let's get back in town, boy. Do you agree? If you're playing for this kind of move, enjoy yourself. They're far and few between. If you're looking for normal moves, they're easier to catch, and that's the name of trying to be a trader in SPDRs and ETFs. But that brings us back here. Normally, and how I teach trading, is the first time you hit a Bollinger Band, that's where I think the pros are coming out. If the market is embedded, I think they'll continue to sell short on the rallies. But when you're over 20, they won't do that. And if you take a look yesterday, you had a reading over 20, and today's reading, 34. Where do I think the market's going? I think it's going back to the 18-day average of closes, because often that's the case. Where would my thoughts be wrong on that? If you get under 1655, you'd have to make a low under the most recent low. So as I was looking when you lost the embedded reading here to come here, I'm now looking for it to possibly get back up there for the reason that I've just given you. 1654, I'm wrong in the market, in my thought process. In SMH, okay, you got down to the lower Bollinger Band. Now, there are times when different things happen. The combination of a 100-day average and a Bollinger Band is a lot of support. A lot of traders, and you watch Bloomberg, CNBC, Fox, they'll bring up their charts. Here's the 200-day average. Here's that 100-day average. Notice how the market keeps holding that 100-day average on the pullbacks in the market, blah, blah, blah. Okay. Combination of that with other things has more value to me than just it by itself. But I recognize that long-term moving averages have a following all by themselves, and you're getting your bounce in the market. You never did embed, you were just oversold. So a hard rally in the market could be a bottom, but more likely you're going to find waiting sellers on a hard rally against that 18-day average on the first big test of it. In XLI, you got over the Bollinger Band yesterday, you pulled back under it because you're overbought, number one, and I don't see a trend. Again, higher high, lower low on the market. I realize it's a new high. I mean, I'm not blind to it, and it was an easier trade all through here with the embedded reading. This became the difficult area. That's all I'm saying. I'm still, on the long-term charts, very friendly to that market. Energy sector, still embedded. I'm not bearish. I realize crude is falling, but this sector still looks good on this chart. But you hit the upper Bollinger Band, you're pulling back. I expect the pros are buying on this pullback until the red line closes under 80, looking to get back to the Bollinger Band top. QQQ, let's go back to what I just said. As a market falls and you were in a downtrend, I think the pros came out here. This was the easy play. Now you're falling back, you come up, they're probably selling it, buying it back, but now you get oversold. I don't think they're selling it. I think once you get oversold, be it algorithms, whatever, they build into the market, hey, under these circumstances, we don't want to do this, or we're going to cut down this, blah, blah, blah. All an algorithm is everything you can put into it. What do you think algo trading is? Every thought you have put into a computer with hierarchies one way or the other. Then I take a look at what's going on right through here. So I've got the oversold market into this. What did we just talk about on the 100-day moving average? If you hit that number, I'm looking for strong support. So there it is, oversold. Okay, I'm waiting, but you're still in that area, and today you get this bounce in the market, and it's wonderful. Did it change the chart picture? No. You're still oversold and in a downtrend. Resistance is wherever that 18-day average gets hit, and yes, because you're oversold, I don't think you're going to get aggressive selling on that rally. Get these numbers together over 30, and I think you do, but they first got to get them over 30. In the emerging market ETF, this has been one of the failure trades of the year so far. I don't think at the end of the year it will be a failure trade. But as you know, the two popular trades for 2021 were short the dollar, long emerging markets. Go back to December, dig out everything. You'll see those were the very two popular trades. Very, very popular. Well, you hit your Bollinger Band the first time. You'd hit it in January at the beginning of the year, right? You then started your rally. That's the the play. Oh, we got to be long emerging. This is the first time you hit it. That's where I think the short covering set in. And I think the market is in a downtrend, oversold, stopping at the resistance zone of the 18-day average. The first sign that it's been too much maybe is 75.58. But you keep in the back of your mind that as interest rates keep creeping higher, and if they do that, that weighs on markets like this because the dollar keeps getting stronger. I already saw that Brazil, they're talking now with their inflation rate that they might have as many as 6 interest rate hikes before the end of this year. They're running right now at about, though, 2% interest. They think they could be as high as 5% at the end of the year. Does that choke off an economy? You got to think about that. But they have inflation, commodity good problems, their value of their currency, a lot of issues. Remember, we're talking emerging markets there. Gold market, lower highs, lower lows. Well, what happened? The first time since this break began right here, this is the first time that you don't have a pattern of lower highs, lower lows. You came down and you broke through that today. Day one, not that. You're still embedded. The way that you closed, you got to be careful here. This does not mean that the guys that followed, the pros that followed the embedded reading came out today. But they are watching. Really careful here. Because if you lose the embedded reading, and you'll see it in GDX, that's when they come out of the market often. So I'm looking at this. Let's assume the market rallies and it does lose the embedded reading. Then I'm looking for 164.79. But the way the pattern is, nothing's that bullish. You've got a lower low and a higher high. What about the gold miners? Well, this is what I just said. Here is a market that both numbers were not under 20. Day one of under 20. Day two. Day three. Fully embedded reading. If you lose that reading, you're looking, and that just takes one of the numbers over, let's call it 20, but 21 is what I like to refine it to, but 20 is good enough to give you a here. Well, that would be a sign that you're ending this and maybe you go back to the 18-day average. You tell me what happened. So here you are, this is March 3rd. March 4th, agreed? That's where you're fighting. Where's our March 8th? It should be here. I don't know why I don't have it. I'm very surprised. I don't know why this didn't update. That's my issue. Yeah, the other charts are there. I can't hit refresh on this to bring you in the next 2 days, but that's a gap. You're missing 2 days there. The market came up. So I apologize. I didn't see that when it was doing it. It's just a function of displaying the data, but you got the story. You went back there and you had lost it. TLT, what's bothered me all the way through on this is you lost the embedded reading. You should have gone, at least my rule of thumb, to the 18-day average. You haven't. That's bothersome to me. When that doesn't occur, it tells you how strong the downtrend is. What is going against the market is the fact that it's not even trying to get these numbers over 30 as it's getting small rallies. You now have a pattern of a lower low, higher high, downside bias, very oversold. I don't think you're attracting new selling here, but you're also not getting much in the way of short covering. Last, FXE. You spent, let's go to yesterday, day 1, 2, and right here, 3 days in a row under the lower Bollinger Band. I count each successive day as taking away one of the 5 percentage points on it. I'm going to tell you this too. Spiders and ETFs don't respond as well to that rule as the futures. These can go a little longer than that. I've seen 7 as a more common number that they won't do it. And that makes subtracting 1 from the 5% a little hard, wouldn't you agree? Why is that? Because this market only trades a certain amount of hours a day. Futures trade 23 hours a day. Monday, actually it begins Sunday and ends 4 o'clock Friday. 23 hours a day from 5 p.m. Sunday, Central Time, until 4. So they shut down for an hour, refresh the computers, and away they go again. This market trades from 8:30 to 3. So when you really look at what it's doing, it's got to catch up with what the futures did. It crunches those other hours in there, and the chart action's not as pretty as in the futures. So the theories are the same. If you get down to under the Bollinger Band, I think you're on borrowed time. The combination here of the 200-day average and the Bollinger Band should offer some support, and you're getting a bounce. On the first breakdown, the market went to the 100-day average, and that was your battleground. Then it fell, you'll see here, under this. Now, on the way up, that would be resistance to me. It didn't offer that. So the next support zone, since you're staying under, is probably against that number. Are we embedded? No, you're oversold. This was way longer than I wanted it to be, but sometimes that makes the fun of it too, right? What I do is at 8:40 in the morning, 10 minutes after the opening of the market Central Time, I start recording for you my videos on spiders and ETFs. I do that because I want the market to open and you to be able to look at what I'm doing within the marketplace. It's out often if I don't get distracted after I record it by about 9:30 a.m. I cover these markets and more. I'm up to about 41, 42 charts. The price. Well, first let's talk what's involved. There are about 24 videos in the mornings that I put out through the course of the month. Each one's about 20 minutes long. I'm specific. I want you to buy here, sell there. This is what I think you do there. Here's your objectives in the market. Here's where you'd be wrong. The idea there is to give you trading ideas. So let's assume you're looking at DIA or QQQ and you say, I wonder what Ira thinks. Well, you can go right to it. On our website, there's a scroll bar, in fact, for you. So as you scroll, it'll light up and say you're now in the stock indices, right through where you're at. So I cover all the sectors. The price a little more than a top price of coffee. So let's assume you go into your Starbucks or wherever and you buy one of the big coffees, the specialty drinks, and you leave the people a tip. You're probably about $8, $7. That's what I about run with them. And away you go. So not much more. And you get to see this. You don't have to commit to anything. I'm not asking that you stay with it or don't. If you like it, you will. We offer 30-day subscriptions. We offer 1-year subscriptions. You decide what fits you. And they're 30 days at a time. Do we understand that? Doesn't matter when you come in. It's not based on the first of the month and you bought a March subscription. Has nothing to do with that. Just go to our website under the word futures. It's all there. And remember, if you're on YouTube watching me, hit subscribe. Talk to y'all later.